market movers that we are talking about. But let's talk about a new entrant on D Street. IndiQube Spaces made its D Street debut today with a discount at a discount. The listing price was 216 rupees versus issue price of 237 rupees per share. The company provides managed workplace solution and has a strong presence in Bengaluru and 13 other cities. To discuss more on this, Rishi, who is the chairman, executive director and CEO at the company, is joining us now. Rishi, good morning. Thank you so much for joining in. Now that you are listed, you can give us more sense of what the broader market picture and the future growth is looking like. You have seen a 35% revenue CAGR over the last few years. Is this something you will be able to continue going forward? And while we talk about the top line, bottom line is something that investors want to know more about. As per the P&L, when will you get into black?
So, thank you so much, first of all, giving me the opportunity to come here. And I think our sector has been growing very well, and the industry has been growing at least 20-25% year on year. And if you look at the CBRE forecast for the next 2-3 years, it looks likely that this will grow at that. And we have been growing better than the industry average. So we have every reason to believe that we should be having good, robust growth in the coming time. Plus, I will also like to emphasize that we have almost 33% of the space that we will be occupying over the next 6 to 18 months. And that portfolio should allow us to have a lot of headroom for growth. And overall, I think we should see great performance coming forward, yeah.
And what about the bottom line? You said you're profitable when it comes to a different accounting standard, but yes, with what you report, with those accounting standards, by when will you be seeing a black on the profitability?
Yeah, so very difficult to put a number to that, as you can imagine. But yeah, because a lot of our properties are on long leases, and typically what we have seen for a given lease, basically like after 8th or 9th year, if it's a 20-year lease, the accounting, as per the accounting standard of Ind AS, the tides turn. And since we have a good portfolio, which is now almost like more than 5 years old, and we continue to grow. So I think in the foreseeable future, we should turn it. But if one were to look at like year 23, we have paid income tax. Year 24, year 25, we have paid income tax. So we have been PAT positive all these years typically. So I think it's more, and like that's what as per our roadshows also we have tried to explain to investors that how and what is the right metric. And as we will be releasing our results, we will be providing investors with the comparative on both the accounting standards, so provide them more clarity. So we are very healthy at a EBITDA level. Our unit economics metrics, if you look at our occupancy, is north of 85%, which is very, very good in our industry. So I think all that points to that we are building out a very sustainable, robust growth engine. And that's, to be honest with you, that should not be a worry for any investor. What you are seeing as per the accounting standard, a loss kind of a thing.
Rishi, congratulations firstly on your listing. You're now a public company, so well, you will be asked for numbers. And, geographic concentration is one thing that has been off note in your numbers. 60, almost 2/3 of your revenue comes from Bengaluru. Are there plans to diversify to other major office markets of the country? And what are the plans on the annual for this year?
So we are diversifying. If you see, like a year back, we were just in about 10, 11 cities. Now we are 15 cities. So we are growing. And if you look at, of course, Bangalore is the largest market. And if you are aware, like 30% of the real estate that India absorbs annually just gets absorbed in Bangalore. And Bangalore absorbs perhaps the most amount of real estate as a city anywhere in the world. So definitely we have a pivot towards Bangalore. We see that more as a strength. Having said that, if you look at a city like Chennai, we have almost 1.5 million square feet of space now, followed by Pune. We are going very fast in Coimbatore and a lot of other tier 2 cities. So going forward, see what is happening is that we have to appreciate the fact that work is going where people are, not the other way, like my generation went where work was. So I think that shift is a very secular trend. And IndiQube clearly is looking at riding that wave and trying to expand within cities and in a lot of tier 2 cities as well as we grow.
Okay. Rishi, what is the revenue per square feet currently? What has been the growth so far? And what will the levers be for growth from here on, apart from adding the portfolio that you've been talking about? 8.3 million square feet will be the total asset under management. Will you look at some places with higher margins, any premium places or spaces that you'll be offering to clients?
So we have a very healthy mix of office spaces. If you see, as you rightly said, out of 8.3 million square feet of portfolio, 6.3 million of portfolio is operational. And we have a good headroom of more than 2 million square feet that is going to get added over, as I told you, over 6 to 18 months. So there is quite a good growth potential that we are likely to see. Sorry, I forget the second part of the question. Just can you repeat?
No, I wanted to understand what has the revenue per square feet been? How much has it grown?
Yeah. So I can tell you in terms of seat, like typically we market seats in locations like Outer Ring Road, kind of locations in Bangalore between 8,000 to 9,000 rupees a seat. And seat for us is about 45 square feet on an average. So if you go by that logic, about 180 to 200 rupees is our revenue realization per square foot. That's what we realize, yeah.
All right, Rishi, thank you so much for sparing time joining us. Congratulations once again on your listing, and we hope to chat with you once you come out with your numbers as well. The management of IndiQube, the second listing of the day. The stock listed at a discount is slightly extending its losses now, 11% lower now compared to its issue price of 237. The other one though, GNG, listed at a 50% premium, still holding on to gains of around 43 to 44%. Take a short break here on Trading Hour. All things commodities on the other side with Manisha Gupta.